Jim, we're wrapping up the third quarter here, lots of window dressing. How do you not get suckered into a stock that's been bid up?
All right, well, I'm urging people, I did a piece on realmoney.com about this. I'm urging people to understand that there's a bad two-day dynamic developing here. You have Rosh Hashanah tomorrow, Jewish New Year, tends to be a very thin market. You have a very important German vote that could be very similar to when we first voted on TARP and turned it down because politically no one wants to help the banks there or here. And it's also you're endorsing profligacy of Greece if you vote in favor of. So there's going to be like big populism. So don't think that it might not pass the first time around as people want to assert themselves, legislators want to assert themselves in a democracy of not wanting to be affiliated with a bank bailout, especially bailing out private investors. So you have a thin market, end of the quarter where the market's really been bid up. It's the third straight day that it's up, where if someone wants to knock things down because they're a short fund, I think you could really take it down. It used to be this kind of pacem in terris, a peace on earth about the Jewish holidays where you would just kind of like say, listen, let's not do anything. Mm-hmm. That's when the old gentleman days, those are all long gone. So I think that, I'm willing to take the risk that Germany goes smoothly, that there are nothing but buyers and you have to come in Friday higher to pay. So in other words, that's a risk that I'm willing to take. I'd rather have traders be sellers and buyers hold off. Steffi and I have been speaking, Steffi Link, Research Director of Action Alerts, and I've been saying, look, let's, on a big sell-off, maybe today we buy something, but otherwise I'm not inclined to.
And then in terms of selling profits into any kind of rallies, you didn't avoid doing that?
Well, Barclays came out with a call today, basically said, listen, buy every capital equipment company, use a very high price target for Caterpillar. I would sell CAT into that.
Okay, and then you also did kind of a good chart segment on Mad Money yesterday. Do you see this double bottom, though, forming for the S&P as a bullish signal?
I thought that was the big change that Ross offered. This is Auerbach Grace, and I happen to like Ross because he came through with guns blazing last week telling you to blow out everything and said the gold was at the top. Mm-hmm. He was not any more constructive, except for he did see this short-term double bottom. Look, the charts are horrible, Alex. They're just horrible. The amount of destruction that's been done is just amazing. I would feel better if the market were really oversold, but it's not. But, it is hard to look at those charts and feel any sort of that we're at any sort of important level to hold.
All right, so you got to have your buy list.
Exactly, and again, I'm using yield. I'm just using yield. Yield already. They can't. Classic example in Mad Money and the lightning round, someone said they want to buy, in regular part of the show, someone said they wanted to buy letter X, steel. And I said, look, if you think steel's going to go up, I'd rather take the cushion and go up less Nucor than have the Mexican jumping bean that is letter X, that is U.S. Steel. Capital appreciation, people might say that that's wrong, but I need, because U.S. Steel's down so much, but I need the dividend protection. Even though I would candidly admit that any good news, U.S. Steel will go up a lot more than Nucor, I am still defensive.
All right, fair enough, Jim. Thanks. And for more of Jim's stock picks, go to cramerspicks.com.